rotors on planes, well, or helicopters, if you want to call them that. These rotors that are much smaller will be much, much quieter than helicopters are, much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
You want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though that the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward. In 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member, and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube. It is Tuesday, October 13, 2020. Carol Masser, along with Paul Sweeney, co-host of Bloomberg Surveillance and Bloomberg Markets. And you know, Paul, it's often about the economy in an election year. I think it's safe to say for investors right now, it's really about economic stimulus needed because of the virus, right? Because we're taking another leg down here.
Yeah, another leg down here. We had such a good move up in the market on speculation, in part that we were going to get some stimulus, but we just don't see it, Carol. And it seems like the White House and the Democrats and even some of the Republicans in the Senate really can't agree on much right here.
It's pretty shocking, especially just a few weeks out from the election. All right, we're going to cover all of this over the next few hours. Let's get a check, though, on that trading day. Here is Charlie Pellet.
Hi, thank you very much. Congratulations to the two of you. You come on the air. Stocks lows of the day right now. Stocks falling on speculation that a rally to a 6-week high has outpaced prospects for a quick end of the stalemate over economic stimulus. The Dow, the S&P, and now NASDAQ are all trading lower. Let's get right to the numbers. S&P down 26, a drop there of 0.8%. The Dow slumping 159, down 0.6. NASDAQ down 47, higher by 0.4%. NASDAQ have been trading higher, but now is lower. Apple out with new products and services. We've got Apple shares. They are trading lower as well. Apple down now by just about 3.5%. 10-year up 15, 30 seconds. 10-year yield 0.72%. Gold tumbling 1.7%. That is a drop of almost $33 the ounce at $18.89. West Texas Intermediate crude up 2.1%, $40.25 a barrel on WTI. So again, the focus on stimulus. Got to mention bank stocks just a couple very briefly. J.P. Morgan and Citigroup reporting this morning. J.P. Morgan Chase down 1.6%. Citigroup tumbling 4.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And just as Charlie finishes up speaking, we have a headline crossing. President Trump seeking a plan to withdraw all U.S. forces from Somalia. So the headlines continuing on this Tuesday. Let's talk a little bit deeper about those markets. Let's set the Business Week agenda. Gina Martin-Adams is with us, Chief Equity Strategist at Bloomberg Intelligence, on the phone from New Jersey, and also Dave Wilson, our stocks editor at Bloomberg News. He's on the remote access from New Jersey as well. Hey, Gina, let's start with you. It really does feel like, I know we've talked about this before, but the trade is really contingent on what's going on in Washington and, the possibility of more stimulus.
Yeah, I think that you're spot on. I think it's a combination of stimulus as well as vaccine progress or lack thereof, which really has the market captive. Underneath all of that, though, there is some interesting things happening with earnings. And so as we are sort of launching into earnings season, we've been focused on that. And I do think one of the underappreciated reasons stocks have rallied so far so fast over the last couple of weeks is we've been through a rare period of upward revision momentum headed into an earnings season. On almost all times, quarterly in history, you see stock revisions going in, or estimate revisions going into earnings seasons are lower because companies obviously love to lower expectations so they can beat those expectations, and analysts comply by lowering their estimates. But that's not what we saw over the last month. We actually saw estimates move higher. So while I do think we're definitely going to remain captive to policy and vaccine news, earnings are going to play a part in the next few weeks as well.
Dave Wilson, it's interesting. I was looking at the banks coming out with numbers, and, the J.P. Morgan numbers, for me, obviously, and a lot of investors, kind of a bellwether kind of name for that sector. A little bit better than expected, but the commentary coming out of Jamie Dimon and team is still pretty darn cautious, isn't it?
Well, I mean, there is reason for that concern, especially with the lack of additional stimulus as an issue for a whole lot of consumers. So you can kind of understand the caution. And then beyond that, if you look at what happened in the third quarter, and not just at J.P. Morgan, but also at Citigroup, they really benefited from what was going on with their reserves for loan losses. Actually, J.P. Morgan cut its reserve rather than add
That's
to
what's
it.
wild, right?
Isn't it, though?
Yeah.
So, if the earnings and the revenue are beating estimates, and, a big reason for that is what's going on with loan losses, well, then the concern is whether that's going to be done again next quarter or whether things are going to go in the other direction. Similar story at Citi, which took a bigger hit after its results came out. smaller loan loss provision than analysts were expecting, at least the ones we surveyed here at Bloomberg. So, you look at what's going on in the 11 main industry groups of the S&P 500, you see the banks and the other financial companies among the worst performers on the day. So not the kind of start to earnings season that you would like, at least for the banks.
Right, exactly. And, as you said, Paul, sobering from Jamie Dimon, that one line where he said many won't survive another year of total lockdown. I mean, that is certainly worrisome. Gina, come on in on that, because I do wonder, I don't know, how much of what happens this year in the trading environment will determine what happens next year, or are the 2 years disconnected? Like, how do you see it?
Yeah, I think that what happens this year is meaningful for next year. To the extent that we remain locked longer in 2020, it produces greater upside in 2021, is the way I see it. I mean, frankly, analysts are already anticipating a rough 2020 right through to the end. We're supposed to be in earnings recession. The financial sector certainly no different than the rest of the S&P 500, staying in earnings recession right through to 2021. So the worse it is now, the better it presumably gets in comps in 2021, and that's the bizarre reality of kind of swinging with the earnings cycle. I think, my interpretation of those comments is, yeah, sure, if we remain fully locked down, that's a problem, but we're not fully locked down right now. I think there's a lot of fear that we may have to go into greater lockdown over the course of the winter months, and that certainly is problematic for earnings going into the first quarter. But the reality of the situation is the third quarter was a lot stronger than the second quarter, and that's showing up in the broad S&P 500 earnings, even if the smaller regional banks are unable to participate because they're worried about loan losses. So I think it really is a mixed story, depending on what group you're in. But the broader story is the worse 2020 is, the better 2021 is anticipated to be. Right. And 2020 is already supposed to be so awful that there's only been room for upward revision.
We're going to talk smaller regional banks, too, with Anton Schutz in just a few minutes, so we'll get a little bit of the lay down there.
Hey, Gina, one of the things we've been seeing, or I've been seeing in the marketplace, is this push-pull between, do I stick with my growthy, big tech names that have gotten me this far, or do I try to be brave enough and look to the other side of this pandemic and the likelihood of a pretty rapid economic improvement, given, if nothing else, the easy comps, and then maybe I want to rotate into some cyclicals? How do you kind of view that discussion?
It is. It's quite a battle right now, and it's been going on for about a month and a half, where there is a lot of push-pull, to use your very correct wording, between sectors and styles. Certainly, if you look at small caps as a good example, over the last week, small caps have absolutely surged, and the surge has been driven by cyclical performance, super cyclical, doing significantly better, particularly in the industrial economy. The same happened about a month ago in the large cap index, but we've been back and forth in large caps ever since. I mean, people cannot let go of that tech exposure, and that's been tough. But in general, underlying the trend, I think you do see a little movement into cyclicals, trying to anticipate a better 2021.
I'm not a momentum chaser, but man, when you look at the differences in returns, it's hard not to kind of jump on that train. Hey, Dave, got 20 seconds. Quick tease for your chart coming up.
Well, you got banks kind of stumbling along as they've been today. That's nothing new. But you look at what's going on with the home builders, they've been taking off and setting records. What's that contrast about, and does it last?
All right, good stuff. Appreciate it, both of you. Dave Wilson, he'll be back a little bit later on. Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence. And Paul, we've got a lot coming up over the next 4 hours. Big day for banks. We just touched on it a little bit, but we'll dig a little bit deeper. Big day for Apple.
Yes.
I'm kind of excited. I'm going to get a new phone eventually.
Yeah, and you're going to be 5G. This is, you talk to a lot of tech analysts and investors. They're saying super cycle potential here for this 5G phone. We'll see how that works in this world we now find ourselves in.
Yeah, we've got a great story also in the magazine, Politics, How Florida Seniors Could Seal President Trump's Fate on Election Night. It's a great story. And then we've got another one about a small businessman who really pivoted big time because of the virus, and he caught the attention of Amazon in the process. So we'll get to that in just a moment. Quick check on the Bloomberg Business Week Bite of the Day. One number that tells us a lot. Today's number, very easy, is one, Peru opening up Machu Picchu to a single Japanese tourist. Jesse Takayama had his ticket to enter the UNESCO World Heritage Site on March 16th when the government decided to close the site. This is according to CNN. Takayama was stranded and rented an apartment in a nearby town for 7 months, and for his perseverance, he was given special permission to have the normally crowded site all to himself. See, good things do happen in this world. All right, let's get a check on world and national news headlines. Over to Nancy Lyons we go in our D.C. newsroom. Hey, Nance.
Hey, Carol. Amy Coney Barrett continues to be questioned by senators at her confirmation hearing. Senator Dianne Feinstein, the top Democrat on the Judiciary Committee, asked her whether she agreed with her mentor on the Supreme Court, the late conservative Justice Antonin Scalia, who said Roe v. Wade should be overturned.
If I express a view on a precedent one way or another, whether I say I love it or I hate it, it signals to litigants that I might tilt one way or another in a pending case.
So on something that is really a major cause with major effect on over half of the population of this country, who are women, after all, it's distressing not to get a straight answer.
Barrett would also not give an opinion on whether she would recuse herself from any election lawsuits involving President Trump. Well, with Election Day just 3 weeks away, President Trump and Democratic challenger Joe Biden are concentrating on battleground states that both see as critical to clinching an electoral college victory. Biden is spending today in Florida courting seniors. President Trump will be in Pennsylvania, where he wants to hammer home the risk that a Democratic administration could limit hydraulic fracking. A group of prominent Christians from both sides of the aisle is forming a political action committee designed to chip away at Christian support for President Trump. The new super PAC is called Not Our Faith. It plans to roll out six-figure TV and digital ads focused on Christian voters. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thanks so much. You are listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. This story is the most read on the Bloomberg at this hour, and it has to do with BlackRock's CEO Larry Fink. And he's saying, Paul, that retail investors are transforming the global asset management business with the COVID-19 pandemic, forcing people to rethink how they save and invest. And what's interesting about this is he sees people as saving more.
Yeah.
Right?
It's interesting when we think about retail investors in this pandemic. The first story that I tend to think about is the Robin Hood phenomena, day traders and things like that, getting a little speculative as they look for some action. But this is really a different side of that retail argument or discussion, Carol. And again, when Larry Fink speaks, people tend to listen given their assets under management. And the issue is I think this pandemic has forced them to think about the longer term, maybe a little bit more closely here. Do I have enough savings? Am I saving enough? Am I investing the right way? Because you got to think about this uncertainty here, and it's making people, I think, take a look at a lot of parts of their life because their life has been upended.
Right.
They're working from home, their workflows are changing, and maybe their economic outlook is changing.
Right.
And you have to think about savings.
I think about that statistic, when we were getting kind of into the thick of the virus and everybody was home, and it was like, I forget it was a high percentage of Americans who don't even have $300 or $400 to deal with, some kind of big bill, fixing the car or what have you in their savings. And that was a stark reality and maybe not known to a lot of people. And that just reminded us of the gap that we have in society. It was interesting too, though, Gap talking about the business, and he talked about their diverse platform. He said saw inflows across all asset classes, investment styles, and regions. And he said more than 50% of long-term flows were driven by clients in Europe and Asia specifically. So, money's coming in, right?
It's coming in, and I think that's a good thing for investors to the extent that they can, save more and maybe invest a little bit more wisely. That presumably is going to be good long term.
But you do wonder what it does
to the Larry Finks of the world.
Yeah, but I wonder, for an economy that's so based on consumption, you do wonder what's the counter effect of that. All right, you are listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Stocks lower on speculation that a rally to a 6-week high has outpaced prospects for a quick end to the stalemate over economic stimulus. The S&P's down 20, a drop of 0.6%. Dow Industrials down 114, down 0.4%. NASDAQ is down 22, a drop of 0.2%. 10 years up 13/32 with a yield of 0.72%. We've got gold down 1.6%, lower by $30 the ounce now at $18.92. West Texas Intermediate crude rallying 2.1%, $40.27 a barrel. After earnings, shares of J.P. Morgan Chase down 1.5%. Citigroup lower by 4.3%. Apple rolling out new phones today. Apple shares are down 2.7%. Recapping, S&P lower by 20, down 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate that. You're listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. Well, we know earnings season got underway today. A batch of big bank earnings. Two of the biggest U.S. banks kind of gaining some confidence that the pandemic won't send the economy into a slide anytime soon. That as a result of them setting aside a lower amount of loan losses in the third quarter. So that was interesting. Even so, their stocks are under pressure about some of the comments we heard from them throughout those calls. Anton Schutz is back with us, President and Chief Investment Officer at Menden Capital Advisors. He joins us on the phone from Florida. Anton, it's great to have you here with Paul and myself. How are you?
I'm doing well, thanks. How are you? A little frustrated with the price action today.
Yeah. Well, how do you explain that on JPM and Citi? They're both down. I mean, the overall market's down. There's some, but yeah.
I have this wonderful parallel for you today. It's really easy. Apple, right? I mean, Apple releases all these phones. Everybody's selling on the news. And, you know, I think people realized and thought that they would have good quarters. They did. And they're selling on the news. And I think Citi is selling off further simply because there's just not a lot of clarification on what's going on with the regulatory order, how much it's going to cost them. You know, I think with the transition in leadership, I think that lack of information just cost that stock. But the quarters were fine.
Yeah, the quarters were fine, Anton. I agree with you there. Just kind of reading through some of the commentary from management on their conference calls, there's definitely, I would say, you know, an air of cautiousness that was even a little bit higher than I had been discounting in the marketplace. I think these folks, Jamie Dimon and company, are kind of saying, hey, this economic recovery, it might be slower than we would all like, and it may drag on a little bit longer than we would all like. That kind of came through in his comments. Did you take away the same?
Well, I think Jamie was pretty negative, I guess, sort of after the second quarter, and obviously we've done a lot better. I feel like he's conservative, and I don't think that's wrong to be conservative, but I think that leaves lots of room for him to beat. I certainly agree with his conservatism that he talks that way, and I think everybody's frustrated that there's no stimulus plan for the consumer, because in particular, both J.P. Morgan and Citi have very large consumer businesses, and that's really who's getting those enhanced unemployment benefits, the $1,200 checks. Those are the customers who repay or don't repay their credit card loans. So I think that's really there was some grandstanding there.
Well, and we knew that early on. Like we were, it was interesting to talk about delinquencies, and I think initially people were not necessarily spending new money; they were paying down their credit cards, but and kind of being smart and responsible. I want to talk a little bit about Citi because Corbett really took a beating on that call. One of the analysts over at B of A said, "Why isn't Citigroup the new Wells Fargo in terms of the regulatory issues? Why isn't it, or is it?"
Well, I mean, if you sort of look back on what got Wells Fargo in trouble, I mean, unfortunately, doing damage to retail customers is very different than Citi making a mistake. So I don't think the regulators or Congress people are going to go after Citi because they've ripped people off. I mean, they haven't. They didn't do anything that egregious. Unfortunately, their systems weren't great. The only person harmed were Citi and Citi shareholders by sending out a wire they shouldn't have sent out. But it proved they're vulnerable to mistakes. and that's why they were fined. And obviously they're going to have to spend some money to make sure their systems are up to snuff so they don't make mistakes like that. And I think that's the unknown. Nobody knows how much they're going to spend. But being put in a much bigger doghouse, I think their doghouse is not as big. And by the way, I like Wells Fargo right now. I think they're going to be coming out of the doghouse. I'm not
Finally,
sure
right?
quarter with earnings. Yeah, well, it's been years, and it takes years because they really got into trouble, and a lot of things changed, and more things have to change. But I think there's actually some light at the end of that tunnel.
Well, it's a cultural change, finally, I think, over at Wells in terms of Charlie Scharf finally bringing in an outside person.
Yes, absolutely. And I think the other thing that's going to change there, the expense structure is going to change dramatically. I mean, they've talked about cutting $10 billion of expenses. I mean, that materially changes their earnings. And also, as soon as they get out from under being able to grow their balance sheet, again, earnings estimates can go up substantially. And I don't think they're that far away from that. I think they've done a lot of corrective actions over the last several years. I think they're getting close.
Hey, Anton, when we talk about the big money center banks, we have the capital market side of the equation that can offset to some degree that really tough net interest margin story for the banks. How about some of the smaller regional banks that don't necessarily have that capital markets piece of the business? What's the bull case for some of these regional banks in this low interest rate environment?
Well, first of all, mortgage is going to be a bigger percentage of many of these, and my focus has been particularly on the lower tax states and where people are migrating to the south and southeast, places like Florida and Tennessee and Texas, and there's loan growth is better, and people are buying houses, and so it's not just refinance activity in mortgage; it's actually purchase activity. You can finance the home builders, and what I really think the next leg that's coming is a supply chain coming back to the U.S., which will lead to loan growth. And it'll eventually lead to loan growth for everybody, including the big guys. But, if you think about all the manufacturing that can come back here in the supply chain, I mean, if tariffs weren't enough, this disease has really cemented that. And I think that you're going to start seeing the second half of next year being a loan growth story, both for the regionals and larger banks.
Well, that's what we're gonna get into. We're gonna do a little bit of news, Anton, because our Gina Martin Adams kind of set that up for us about whether the smaller regional banks are they going to be participating in some of that loan growth, especially into 2021. So we're going to continue our conversation with Anton Schutz, President and Chief Investment Officer, of Menden Capital Advisors. He's on the phone from Florida. His RMB Menden Financial Services Fund, by the way, it's up almost more than 12% in the past month, putting it in the 97th percentile. So we'll talk a little bit more about his picks when it comes to regional banks. You're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on this Tuesday, Big Banks Tuesday. I'm Carol Master along with Paul Sweeney. And so we just talked about the big banks with Anton Schutz. We're going to dig into the regionals, Paul, because that's something he's really interested in and actually invests in.
Yeah, absolutely right, Calvin. That's a tough place to make money. You really have to pick your spots, but money can be made.
Yeah, absolutely. All right, we'll get into that in just a moment. Let's get back to your top business stories. Here is Charlie Bella.
Hi, thank you very much. Lots going on. This update brought to you by New Jersey Institute of Technology, a world-class polytechnic university that makes a lasting difference in the lives of its graduates and the businesses that employ them. More at njit.edu. We begin with a breaking story headline from the Bloomberg Professional Service. Eli Lilly's antibody trial has been paused due to potential concerns. This, according to the New York Times, shares now lower by about 2.5%. Worth repeating, Eli Lilly's antibody trial paused because of potential concerns. Again, this on reporting from the New York Times. Johnson & Johnson shares, they are lower as well after the drug maker was forced to pause its late-stage study of a coronavirus vaccine, overshadowing an improved financial outlook for the year. J&J shares were reporting earnings this morning, by the way, down 2.5%. Just a week after his release from the hospital, President Trump returned to the campaign trail last night for the first time since contracting the coronavirus. He told thousands of supporters in Florida, many without masks, despite the ongoing pandemic, that, quote, he feels great and glad he no longer needs to be concerned about infection because he's now, quote, immune. Dr. Ramesh Adalia is a senior scholar at the Johns Hopkins Bloomberg School of Public Health.
Well, we do know that when people recover, they generally are impervious to reinfection for a period of several months. And we know that there's been a few reinfections, but that's not really the normal course. So I do think that for probably several months, at least, the president is not going to be able to be reinfected.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Facebook says it will reject ads that discourage people from getting vaccines, citing a new policy meant to prevent harm to public health efforts. Facebook shares are down by 0.2%. Stocks trading mixed, with the S&P down 27, down 0.8%. The Dow down 204, down 0.7. NASDAQ slumping 30. It is down by 0.3%. 10-year yield now 0.72%. We've got gold down 1.5%, lower by $29 the ounce at $18.93. West Texas Intermediate crude up 2%, $40.22 a barrel. Briefly, among the banks, J.P. Morgan Chase down 1.9% after earnings. Citigroup down 4.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. We are fortunate to have with us for another segment Anton Schutz, President and Chief Investment Officer of Menden Capital Advisors. He joins us on the phone from Florida. So, Anton, thanks for hanging around with us. Let's talk about investing in regional banks. What do you look for? Is it really the region? Is it management? Is it asset quality? How do you kind of rank some of those issues as you pick upon what is a lot of regional banks out there to choose from?
Sure. I mean, the region is really important because, that means even a poorly run bank can, perform. I mean, if you've got a really good management team, they can take strong advantage of a region that's doing much better than other parts of the country. So that's really important. And you talk about asset quality. When you talk about management teams, you want to know how they did last time, right? You want management teams that have been around, that have got a few gray hairs and some battle scars and did well the last time around. And those are the management teams you're looking for. And you also want management teams that I call capitalists, right? People who own a lot of stock and understand that, they could be a buyer, they could be a seller. There's lots of opportunities to make shareholders money. It's not about running a public company just for themselves. It's really important to me, that attitude that management displays.
What I love about you, Anton, I mean, you're very fair and honest when things are tougher in terms of the investment environment. I think the last time we talked to you, you said it's been pretty tough, in this regional bank space. You're having a good month, though. What's kind of changed, do you think, in terms of your strategy and or just the environment for regionals?
Well, I think you've seen a little bit of a yield curve steepening. You've seen the 10-year move higher other than today. A little bit of inflation out there, maybe some more stimulus causing, inflation, whether it's post-election or pre, everybody knows it's coming. The other thing is that, as everybody got into earnings and got closer and started to think about it, the consensus was that the banks were going to beat. And I still think that more of these banks are going to beat as things come on. And I think more banks are going to beat 21 consensus, too. Consensus has to come higher for 21. So those are all positive developments. That certainly led to some of these moves.
Anton, what are some of the names that you like here? Again, we have seen the banks do better in this last month. Maybe people are a little bit more willing to look to the other side of this pandemic and look for some of the names that could do well in an improving economy. What are some of the names that you're looking at the moment?
Sure. So, I like the Southeast and Tennessee, and one bank in particular that has a pretty good footprint in both Florida and Tennessee is a company called First Horizon. Mm-hmm. They also have a strong mortgage unit, which is going to have a very good quarter, and they also have a fixed income, basically broker dealer, First Tennessee Securities, and so they're going to also have a good quarter from that. There'll be a lot of merger noise. They merged with another bank called Iberia, and they trade below book value. They've got a very strong dividend yield. And like I said, they're in 2 geographies that are doing much better than the rest of the country. So they've got a lot of positive things going on here, and it's a self-help story because I think they're going to be able to cut more costs than advertised.
And First Bancorp, I know, is another one. Just got about 30 seconds here. What's the take on that one?
Well, it's Puerto Rico. It trades at about 60% of book value. Drug manufacturing is about 30% of the Puerto Rican economy. So all you have to think about is some of the drug supply chain coming back here. That's going to happen. $5 billion of CARES Act money's already gone to Puerto Rico, and the president just released, I think, $11 billion of FEMA funds. So Puerto Rico economic growth.
Hey, listen, I'd be remiss because you're a loyal listener, and I know you were listening yesterday, and Charlotte St. Howard of St. Martin, of the Broadway League. You guys are friends.
Well, she's terrific. Had the opportunity of getting to know her over the years, and she is a force. So they're all lucky to have her on their side there.
Yeah, we're certainly rooting for them because it's been really tough for the theater area. Hey, Anton, thank you so much. Really appreciate all the time that you gave us on this Tuesday. Anton Schutz, he's President and Chief Investment Officer at Menden Capital Advisors, joining us on the phone from Florida. And, I always love talking to him, Paul, because the regionals, we always talk and always cover, of course, the big banks, but the regionals are just often have a great window into what's going on in local economies, and I just love getting his perspective.
Yeah, you're exactly right, and that's those. Think about some of those small, mid-sized banks that really have their finger on the pulse of what's going on in their markets.
Totally.
And as Anton said, go to some of those regions where there is economic growth. People are growing and going, and that's in the Southeast.
All right, good stuff. All right, let's get back to World and National News headlines. Over to Nancy Lyons we go in our 99.1 newsroom in D.C. Hey, Nance.
Hey, Carol. Senators have been reciting their personal views on abortion, guns, gay rights, and Obamacare at today's confirmation hearing for Judge Amy Coney Barrett. But like others before her, Barrett is not telegraphing how she might rule as those issues come before the Supreme Court.
With regard to decisions the court previously handed down in abortion cases, Judge Barrett asserted,
I have no agenda to try to overrule Casey. I have an agenda to stick to the rule of law and decide cases as they come.
And she added,
in my personal interactions with people, I have a life brimming with people who've made different choices, and I've never tried in my personal life to impose my choices on them. And the same is true professionally.
Beyond that, Judge Barrett said racism is abhorrent and discrimination against gay people is abhorrent. In Washington, Irv Chapman, Bloomberg Radio.
Senate Majority Leader Mitch McConnell says he is scheduling a vote concerning a GOP COVID-19 relief bill for later this month, saying aid to hard-hit businesses should not be held up by gridlock involving other aid proposals. He says it'll be a scaled-back aid bill. House Democrats have urged a larger package than Senate Republicans have been willing to consider. It was revealed today during a hearing on the alleged plot to kidnap Michigan's Democratic Governor Gretchen Whitmer that she was not the only governor that anti-government paramilitary groups were allegedly targeting. An FBI agent who was part of the investigation that led to 13 arrests last week testified today the men also talked about kidnapping Virginia's Democratic Governor Ralph Northam. The agent says they were unhappy with his response to the pandemic. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Paul Sweeney, I feel like this story just, is just a nice add-on to what we talked about, Larry Fink from BlackRock. I feel like the race is on for client assets and just kind of individual investors, because this is a story about Fidelity by our Michael McDonald. And it says Fidelity plans to hire 4,000 people over the next 6 months as the money manager benefits from this year's turmoil while some of its rivals struggle. But basically, they just talk about they need more people, more financial advisors, more customer service agents. And I guess it's because a lot of new accounts are being opened up.
Yeah, absolutely. And it kind of, again, it really dovetails with what we heard from Larry Fink at BlackRock. And, they're looking, it's interesting. It kind of goes to that active versus passive management, discussion. For years, it had just been, boy, those active managers like the Fidelities of the world really under pressure from the ETFs of the world and some of the passive managers. But here's an example of, probably investors saying, I need some help here. I need some advice. I need to think about my future a little bit more.
Right.
And Fidelity is obviously a phenomenal brand name in the retail community. Their offices all over the country. And I think it makes a lot of sense that they're going to staff up in anticipation of probably what they believe is going to be growth in assets for them on the retail side.
Well, it is interesting when you think about the trends that are happening in the financial sector, and we talk so much, right, about Robinhood, understandably so. But if you think about what, as you said, kind of piggybacking on what also Morgan Stanley did with buying Eaton Vance, I mean, they are bulking up, their business of managing money, particularly when it comes to wealthy clients. But nonetheless, people, the financial community, it feels like as a whole, are really aggressively going after, customers' investments in their investment accounts at this point. It just feels like there's a very big trend and push towards this.
Yeah, and you think about James Gorman at Morgan Stanley. For years, his strategy has been asset gathering, private wealth management. We'll leave the hotshot trading maybe to some others.
Yeah.
This is the future of the business.
Yeah, it's pretty impressive, and it's nice to see people hiring, especially in such a tough environment. You are listening to Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Eli Lilly says enrollment of participants in a critical trial of its antibody treatment for COVID-19 has been paused because of a potential safety concern. Eli Lilly shares they are trading lower now, down by 2.9%. The Dow, the S&P, and NASDAQ all trading lower on speculation that their recent rally has outpaced prospects for a quick end to the stalemate over fresh economic stimulus. The S&P 500 index is down 29 points, down 0.8%. The Dow's down 220 points now. That is a drop of 0.8%. And NASDAQ is slumping 28 points, down 0.2%, was trading higher earlier in the session. 10-year up 14.30 seconds now with a yield 0.72%. Gold down 1.5%, 28.91 the ounce at 18.93. And West Texas Intermediate crude advancing 2%, up 80 cents a barrel, $40.23 on WTI. The Verge is reporting that Netflix is no longer offering free trials. Netflix shares up 1.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Missed that one, that's for sure. All right, Charlie, thank you so much. Well, Florida has become a bit of a battleground when it comes to the November election. This Bloomberg Business Week story, it's about a state that is critical to President Trump's reelection, and it zeroes in on senior voters and what the early trends are showing. We love checking in on all things related to the election and the campaign trail with our own Josh Green. He's national correspondent at Bloomberg Business Week, author of Devil's Bargain, Steve Bannon, Donald Trump, and the Nationalist Uprising. Josh joins us on the phone from Washington, D.C., along with Bloomberg Business Week editor Joel Weber. Joel is on the phone in Massachusetts. Florida, such an important state, Joel.
Yeah, and as Josh writes in this dispatch, we're really looking at an outcome here that for Trump to have any real certainty of getting back and retaining the Oval Office, he really needs Florida. And so the Democrat strategy is obviously to try and take Florida out of his hands. But what Josh actually gets into here is there are some early numbers that we're seeing from Florida, and the swing among seniors, which is a demographic that Trump had locked down last election, is just 180'd and is already in early numbers is veering towards Biden. Josh, what does that mean in the grand scheme of things?
Well, basically what it means is if the current trends continue, Trump isn't going to win Florida. If Trump doesn't win Florida, he's not going to win the election. But what's so interesting about this is we've all been reading about these nightmare scenarios where states don't count their vote and it's thrown out for weeks and the election is contested. What's great about Florida is that it counts its votes really as they come in. So about 20% of the votes, the early votes already cast in the 2020 general election, have been cast in Florida and have already been counted. And Florida updates those numbers. So what we did was we took a look at who was voting early, and the thing that really jumped out was that seniors, voters age 65 and older, were voting at a 10 times greater clip in 2020 than they were at this point 4 years ago. And if you look at the poll numbers, we wrote about this in our election issue of Business Week in September, a group that I called Swinging Seniors. Seniors supported Trump by not necessarily what you think it might mean, so I better explain. Seniors supported Trump by about a 17-point margin in 2016. The latest polls in Florida have Biden winning seniors by 15 points. Wow. So if you add those two things together, a huge swing to Biden among seniors and a huge outpouring of support, it isn't surprising that this is good news for Biden. If it keeps up at this pace, what I say is we'll know on election night whether or not Biden has won Florida, and if he has, I think there's a very good chance that he's going to be president.
So, Josh, what has the president, quote unquote, done wrong? It's certainly not for lack of effort down there. He was just down there last night again campaigning. What's really been the change?
Well, there have been two things. I mean, number one, and the easy answer is COVID. He was down there campaigning last night at a gigantic maskless rally in Orlando, which, as you might imagine, spooks an awful lot of seniors. If you look at the main driver of the senior vote, it's been Trump's handling of the COVID pandemic. Doesn't seem to have inspired a lot of confidence among older voters. Not necessarily surprising. But, as I say in the piece, the big question about early voting is, are these new voters? Is this genuine enthusiasm, or have older voters simply moved up when they cast their ballot? Are these just people who'd vote anyway on election day, deciding to vote early through the mail because it seems safer? That's certainly some of it, but the other interesting factor here is that it appears to be much broader than that and much broader than COVID, because if you go back and look at the results of the 2018 midterm elections, there was once again a huge spike in senior voters, and of course that predated COVID. So what we can conclude from that is that seniors are much more eager to vote and seem to be much more willing to vote for Democrats now than they were in 2016. And if those trends continue in Florida, where they're especially pronounced because there are so many old people there, it really spells bad news for Trump.
Well, and what's interesting is you have to think, Josh, that the Trump camp is a little bit worried because you think about the video that he did, after coming out of the hospital. It was aimed directly at seniors.
Yeah, so when Trump was cooped up in the White House when he was still contagious with coronavirus, he shot a kind of an awkward cheerleading video on the lawn of the West Wing that was aimed at reassuring seniors, I love you, I care about you, so on and so forth. I think that was a clear reflection that his campaign staff was looking at the same numbers I am and thinking to themselves, unless we change the minds of these senior voters pouring out to the polls and to the post office to mail their ballot, we're going to be in real big trouble. Let's try and turn this around now. I think the problem is, it's really hard to change public impression of how you handle the pandemic if you come out of the hospital sick with COVID and then turn around 10 days later and have a maskless rally like Trump did in Florida last night.
Josh, one of the things that I learned in this story that I thought was really interesting is that Florida is actually counting these ballots as the absentee ballots, mail-in ballots, as they arrive, basically, so that in theory, at least, there's a pretty high likelihood. And election officials in Florida have even said, don't hold us to it. We might need longer than the day to know who the winner is. But the mechanism of being able to count so many of these votes ahead of time makes me wonder, when you look across the country at other swing states potentially, what kind of timelines do other states have for counting ballots and officially announcing results of their elections?
Yeah, it's a great question. I mean, there's certain states like Oregon, Colorado, Florida, who do a lot of voting by mail, a lot of early vote counting. They've done this for years and years and years and have a fairly good system. That's why we have such a good glimpse of who's voting in Florida. The thing that worries a lot of people is that because of the COVID pandemic, you're going to have a lot of mail-in voting everywhere, including in battleground states like Pennsylvania and Wisconsin, that A, aren't accustomed to counting floods of early votes, and B, and this is a little crazy, have laws that forbid election workers from beginning an early vote count before election day, which only makes this process even harder. And as a consequence, there have been a lot of worrisome scenarios bandied about if the election comes down to Wisconsin and Pennsylvania, we may not know for weeks until all these votes are counted who the actual president is. And of course, there could be all sorts of shenanigans in the meantime. I think what this Florida data tells us, at least in the direction that it's trending, is there's another alternative, and that is that Biden is going to win Florida early, and none of that other stuff will matter.
God, it just is so interesting. Josh, we always learn stuff when you report and bring it back to us. Josh Green, national correspondent at Bloomberg Business Week. Thanks to you, as well as Joel Weber, editor of Bloomberg Business Week. We do want to point out that Michael Bloomberg, of course, the founder and majority owner of Bloomberg LP, the parent company of Bloomberg News, pledged last month to spend $100 million in Florida to help Joe Biden's election efforts. All right, you're listening to Bloomberg Business Week. For those of you listening in New York, D.C., and San Francisco, also watching on YouTube, Bloomberg Business Week, we're going to come right back. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. Coming up next, we got to talk about fiscal stimulus, what it means for the markets, what it means for the economy, what it means for the recovery. That's next on Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, October 13th. Stocks are trading lower. The Dow, the S&P, and NASDAQ all declining. Right now, we've got the S&P down 23 points, down 0.7%. The Dow's lower by 180 points, down 0.6%. NASDAQ is down 9, a drop right now of just about 0.1%. Russell 2000 down 0.8%. Dow Transport slumping 0.9%. The NASDAQ 100 index is now just about unchanged. To put that in context, NASDAQ Composite Index lower now by 0.1%. Stocks are falling on speculation that their recent rally has outpaced prospects for a quick end to the stalemate over fresh economic stimulus. Treasuries and the dollar climbed. The 10-year, the yield now 0.72%, higher by 14/30 seconds. Banks are leading losses in the S&P 500 index, with J.P. Morgan Chase and Citigroup sinking as investors worry that third-quarter results signal just a pause in pain from soured loans. Shares of J.P. Morgan Chase down 1.7%. Citigroup, though, dropping by 4.6%. Johnson & Johnson shares are slumping 2.3% after temporarily halting its late-stage study of a coronavirus vaccine, while Eli Lilly announcing within the hour that its trial of an antibody treatment for COVID-19 has been paused. Eli Lilly shares, they are now lower by just about 0.3%. So a down day for U.S. equities. As for the overall economic backdrop and the outlook for jobs, Catherine Mann is global chief economist at Citigroup.
The unemployment part, the bolstering of domestic demand through consumers, that's really a very weak part of this story of recovery. And it's not a recovery. It's we only get back to where we were in January. That's just getting out of the hole. That's not a recovery.
Amazon.com shares are higher as its two-day Prime Day sale kicks off. It is expected to give the world's largest e-commerce company an early advantage over brick-and-mortar rivals, still contending with pandemic-spooked consumers wary of battling Black Friday crowds. Amazon shares up 0.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer on Bloomberg Radio.
All right, so Paul Sweeney, man, back and forth. That is the world of Washington right now. I know House Speaker Nancy Pelosi, she told her, I think, Democratic colleagues that President Trump's latest proposal for stimulus falls short of what's needed to really help out the economy and really battle the virus. So they are constantly going back and forth, and we see it play out in the financial markets. Meantime, we've had the IMF come out warning that the world still faces an uneven recovery until the pandemic is tamed. So we are not in a great place. So let's get into today's Business Week economics. Stimulus definitely front and center. Let's talk about it with Frances Donald back with us. She's Global Chief Economist, Head of Macroeconomic Strategy at Manulife Investment Management, on the phone from Montreal. So Frances, I feel like, do you guys have a Zoom meeting, like your whole team, and you just say, can you believe that these guys in Washington and gals just can't get it together? Because it's ultimately about stimulus and getting the economy back on track.
Well, we have plenty of Zoom meetings, but most of the time what we talk about is how this is a lot of noise. We basically tend to focus on two key stories. One is that we know we're getting a fiscal package at some point. Everybody knows this. Now it's just about when we get it. Do we get it before the election? Probably not. Does it then mean we get it in Q1 2021? Yes. So the fiscal trade is still very much in play, even though we get a lot of these headlines going on.
Well,
the problem
go ahead.
is that the longer we have to wait for it, the longer we risk an economic accident. So when I watch these markets selling off because of the stimulus news, what I interpret that as is not, oh no, we're not getting stimulus, is that we're leaving ourselves open to more vulnerability before we get there. And that's the fundamental problem with these headlines.
And that's what I just want to jump back. That's exactly it. I mean, the longer we wait, right, the more, the tougher the drop is, or that we may stay there even longer, or that we'll need more stimulus to get out of it.
Yeah, that's exactly right. So when we look at globally other developed markets that are maintaining their foot on the fiscal pedal, they're not at risk. So now we're starting to see a bit of a wedge here created by the U.S. experience of the recovery and the European, the Canadian, a variety of other G10 economies. So the U.S. is really opening itself up, not just to vulnerability or increasing its probability of a double-dip recession, it's also putting itself out there in stark contrast to the rest of the world. And that, of course, is going to start to have implications for FX and some of the relative trades out there.
Yeah. All right. So, Francis, this scenario that looks like it's playing itself out in terms of we're going to have to wait for fiscal stimulus. What are really the risks here that you see? Is it more deeper unemployment, maybe longer lasting unemployment? Is it business investment that just won't or take much longer to come back? Where will we pay the price, do you think?
So my biggest concern is really on the employment front, and that is because we know that structurally high unemployment, the longer you've been unemployed, the harder it is to get rehired. You have skills degradation, people get frustrated, they drop out of the labor force, and that tends to be really sticky. But what's so challenging about this recovery, and I know we're all rolling our eyes already, we're tired of hearing about the K-shaped recovery, but the K-shape is so important because the K-shape is telling you that the manufacturing side of the economy can continue to just re-accelerate very aggressively, even in the absence of stimulus, but the services side of the economy will lag. And what does that effectively mean? It means that the stock market, which is heavily leveraged to manufacturing, will continue to diverge from the economy underneath it. And that's why that K-shape becomes so critical. And the longer we wait for fiscal, the more that K-shape, the larger the wedge between those two sectors of the economy.
I love that you mentioned K-shape. I was just reading something from Peter Atwater, who coined it, and I love talking about it. I do wonder, though, God, I mean, are you getting at all, Francis, a feel of what 2021 is going to be like?
Yeah, so I have this three-phase framework to talk about the recovery. Phase one was the rapid rebound. It's behind us. Phase two is the stall out. It lasts for a year and a half until the end of the virus. And then phase three is what we call the new normal. But one thing that I've been advising a lot of portfolio managers to think about is not to wait until we're on the other side of COVID to make the trades that are associated with the other side of COVID. And by that I mean, as we sit here waiting, as we talk about things like fiscal, as we wait for the vaccine, what's effectively happened? Monumental changes to the way that the fixed income market is trading. We have extraordinarily low interest rates that will stay that way, and we essentially have financial repression of the curve out until the 10-year. So we're in an environment where the way that we think about inflation mitigating or inflation working its way through the system, a steeper bond yield, all of these factors are really getting heavily manipulated by where we are now, and I do believe that's tradable even as we wait for what 2021 looks like.
So, Francis, Carol and I just did a story on Florida and the election and some of the positive polling we're seeing there for former Vice President Biden. If, in fact, we do get a Biden win, maybe even a move to the Democrats in the Senate in terms of getting a majority, how's that play into your outlook?
It implies that we get a very sizable fiscal package, perhaps slightly more. But the key trades that I think work in this particular environment, which is massive issuance, fiscal spending, extraordinarily low interest rates that may move down lower, deglobalization, they work no matter who wins. So, you know, we've been victims of this before, where we look at polls and we feel like we have confidence in what's going to happen. Right. I'm not going to play that game. I don't want to do that. So find the trades that work no matter who wins. And there are plenty of them. I think trying to game the election is a fool's errand right now.
The only thing I will say is everybody should read Josh's story, because what's interesting about Florida is that those early votes go right into the number. It's not like they're held until later on. So it's kind of interesting about that. Hey, just got about 30 seconds left here, Francis. Paul and I were messaging back and forth. Stock market leverage to manufacturing. Is that really true? We all kind of keep thinking about this market being more high tech or, you know, leverage to the FANGs. Is it really leverage to manufacturing? Just quickly.
Well, why don't you think about it this way? Instead of saying it's leverage to manufacturing, think how little of it is leverage to actual services and the everyday household and consumer activity. And if we put it that way, then it becomes very clear that if people are suffering, unemployed, have trouble getting food on the table, you can still see tech stocks rally. So maybe that's a different way to think about it in this K-shaped recovery. Really think of it as consumer services versus non-consumer services.
All right, appreciate that. Great conversation as always. Francis, thank you so much. Francis Donald, she's Global Chief Economist, Head of Macroeconomic Strategy at Manulife Investment Management, on the phone from Montreal. Love her energy.
Yes, absolutely. It's interesting to see how, you know, invest and try to take out the political risk is another takeaway for me.
Yeah, exactly. All right, let's get back to world and national news headlines. Lots going on when it comes to that. Here is Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. The Senate Judiciary Committee has been posing questions to Supreme Court nominee Amy Coney Barrett today, and she's defended herself against accusations that her conservative views will greatly influence her decision-making.
Judges can't just wake up one day and say, I have an agenda, I like guns, I hate guns, I like abortion, I hate abortion, and walk in like a royal queen and impose, their will on the world. You have to wait for cases and controversies, which is the language of the Constitution, to wind their way through the process.
Conservatives are hoping President Trump's pick will benefit his administration's challenge to the Affordable Care Act immediately after the election and also deal with potentially any election-related lawsuits. There's plenty of talk about stimulus in Washington, but odds are decreasing it could be converted into action. Bloomberg's Nathan Hager reports.
Stimulus, go big or go home. President Trump put that message out on Twitter shortly after Senate Majority Leader Mitch McConnell announced he's going narrow on another round of pandemic relief with a vote next week on more small business funds under the Paycheck Protection Program. Earlier, House Speaker Nancy Pelosi told her fellow Democrats the latest White House offer of $1.8 trillion falls significantly short. The dueling rhetoric suggests President Trump's newfound openness to a bigger deal might not be enough to secure an agreement. In Washington, I'm Nathan Hager, Bloomberg Radio.
Eli Lilly has put its government-sponsored antibody test on hold due to potential safety concerns. The company made the announcement just hours after Johnson & Johnson paused its COVID-19 vaccine trial because of a participant's unexplained illness. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So I may do a little bit of an audible here because
I like it.
This story. Okay, so Oyster Bar,
Yes.
man. I think of New York City. I think of gosh, I can't even Grand Central, right?
Sure.
And
Yeah, it's one of my faves. I mean, this is old school New York. You walk in there and you think Mad Men. Nothing
Totally.
has changed since then. And it's closing yet again. There's just nobody running through Grand Central Terminal, which was the source of a lot of its traffic, literally. And it just goes to show here another institution, at least temporarily, shutting down in New York. Just a brutal story in the sense that for so many people, for so many generations, particularly those who do travel through Grand Central,
right,
it's a mainstay.
Yeah, exactly. So they opened, I guess, 2 weeks ago. They reopened, but again, we know that indoor dining has had a lot of rules and constraints to it. And like you say, Paul, it's been a fixture. It's been there since what, 1913.
Yep.
But yeah, if you think about it, and this story from the Wall Street Journal, Dow Jones, they said they knew when they reopened it wasn't going to be an easy ride. Because of this, limited indoor dining, but I guess they tried to do it, but sales reached only 3% of pre-pandemic levels. Listen, anybody you talk to in the restaurant business, like they say, you got to be really pretty much operating at full capacity in order for it to work financially. This is not an easy business.
Yeah, that's what I've come to learn. I've learned so much about the restaurant business over the last 7 months as we talk to owners and operators here, and it's a thin margin business, and it's really driven by volume. And 3% isn't going to do it. So this is one of the parts of the economy nationally, but certainly in the metro New York area, where we rely so much on tourists and spending their consumer dollars at our restaurants and our other consumer areas that they're really feeling the pain, and you really feel for them. And people have been trying to support them as much as we can, but I think they're just going to have to wait for a vaccine.
Well, Metro North, they say readership is still down, I think about 80, it's nearly 80% from pre-pandemic levels. So it's down still a lot. We know that. All right, you're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It's been a volatile session. Check your screen. NASDAQ back in the green now. The Dow, the S&P, both lower. Let's head right over to the first word breaking news desk for today's very latest. He's going to keep us up to date with his afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks very choppy today, looking for direction. The Dow is currently down 138 points. S&P's dropped 18, while NASDAQ, like you said, in the green, up 22. The U.S. 10-year yield at 0.73%. Gold is trading lower by 29. Transports drop 101 points. And among the main 11 S&P sectors, only telecom and consumer discretionary were in the green. Leaders to the upside in the Dow, Disney, Microsoft, and Walmart, while Travelers and Boeing led to the downside. After earnings, Citigroup was under pressure, falling 4.7%. JP Morgan dropped 1.7%. And in other news, the Eli Lilly virus antibody trial was paused due to safety concerns. Wrapping things up regarding a stimulus package, there are reports that Pelosi has no intention to meet McConnell in the middle. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, Bill, we thank you very much. And to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That's a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much. Well, in this week's edition of Bloomberg Business Week Small Business Survival Guide, it's all about pivoting. And you know, Paul, we've heard that so many times from small businesses and big businesses. They've all had to learn to pivot in order to keep their companies going through the pandemic. And that includes one small business owner that saw COVID-19 pretty much shut down its shuttle service. So what did he do? He actually started a new business. Let's get into this with Trent Griven-Broff. He's owner of GB Logistics. He's on the phone from Albany, and he joins us along with our Bloomberg News editor, Dimitra Kesanidis. She's on the phone in New York City. So, Dimitra, let's kick it off with you. I mean, this story, hard not to be blown away by what Trent did because it got the attention of Amazon.
Yeah, absolutely. I mean, I think that, we, again, on this theme of the difficulties and the challenges, you have to be ready to completely, pivot, get into something new. What he did wound up tapping into, I think, a business that he had a lot of experience in and was able to then really turn things around, given that the pandemic very seriously kind of curtailed the shuttle business at the beginning. But he got Amazon's attention. They reached out, and I'll let him tell the story. We have several examples of people who started really successful businesses in the last 8 months, and I think Trent is definitely one of them.
So Trent, come on, tell us kind of what happened to you because of the virus and then how you pivoted and switched your business.
Awesome. Well, thank you guys for having me, first off. I had a company called Tech Valley Shuttle, started it in 2016, shuttle company. We were more so working with the hotels and, quickly within the few years pivoted a few times into doing weddings and become like a corporate kind of business, working with different corporations. But once COVID hit, everything stopped, from weddings, corporate business, to the hotel industry. So everyone we had partnerships with were devastated, just like many across the world. And at that time, I was able to, pivot the business, actually create a new business, staying within transportation, but then focusing on logistics. And we were able to land Amazon as a partner for this, which was a blessing.
So, Trent, talk to us about that business, GB Logistics, working with Amazon. Kind of describe what your company does and what your experience has been like now with this new company.
Gotcha. So we essentially have a partnership with Amazon in which we deliver any package that's 40 pounds or heavier, anywhere within a 150-mile radius from our warehouse in Albany, New York. It comes from us. And so with that, if anything 40 pounds or heavier is coming from us. So I found that with our short period with Amazon thus far, it's been wonderful. It's essentially like a franchise opportunity in which, they kind of lay the blueprint and give the expectations and kind of get us trained as well as our team trained up to how they want things done. And then, the rest is on me management-wise of assuring that we get the job done truthfully.
And Trent, how has that business gone? I mean, we just see delivery of boxes has just surged here. Just looking around here in my neighborhood, boxes almost every day in front of almost every house. Talk to us about the pace of the business.
It's definitely a fast-paced business. I can say, in terms, it's very fast-paced. I mean, within a month's time, we're up to 53 employees. At Tech Valley Shuttle, the highest employee count we had was, around 20. In terms of like just revenue, the revenue through the business, is 40 times faster than what we were doing at Tech Valley Shuttle. So, all in all, this is a fast-paced business. It feels like it was a great time to transition because the world is ordering everything online. Malls and things of that nature are being less and less utilized. And, I just feel like we're in a great position to actually change as the world is changing and being a part of that change.
So, Trent, let me ask you a quick question as we start to wrap up a little bit. But one of the things that you did with your earlier business also was you were very focused on this mission of employing people who face hiring barriers. Is that something you're able to continue with this new business? And are you still as dedicated to that? That's been a big part of what you've made sure you do.
Definitely. My heart has always been there because I'm someone who, in my previous life, was a ex-felon. And so I knew the barriers that came with that. And so I'm dedicated to helping others get gainful employment and actually a livable wage. So this has definitely presented that opportunity. There are still barriers. Amazon has its own criteria that has to be met. But the beautiful thing in that is, I still have been able to help employ many individuals who, have similar stories, as well as now with this partnership with Amazon. Naturally, I've been leveraging that and, using my connections locally to try to assist others. Even if it's not with me, it's with other organizations. The one thing Tech Valley Shuttle does,
right?
We get people to and from work. That's what we specialize in. So we were already in that arena.
Right.
So the partnership with Amazon has just allowed us to really leverage that and help a lot of people.
Well, it's really cool to see you to be able to do, just to be able to have done this and really come out on the other side in a really strong way. Trent, thank you so much. Trent Griven-Broff, he's owner of GB Logistics, on the phone from Albany. And then, of course, our Bloomberg News editor, Dimitra Kesanides, on the phone in New York City, our Bloomberg Business Week Small Business Survival. Great to hear those small business stories. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
To New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Paul Sweeney, we're getting to the point of the day where we can kind of kick back, grab a drink, and just let Dave, Wilson play a song and talk about the start of the day. We can just take a break for a little bit. We'll see what Dave has in store for us in just a moment. Let's get back to your top business stories and a check on that trading day. Charlie, 29 minutes to go here.
Indeed, 29 minutes to go, and we have got a mixed picture right now. NASDAQ higher. It's been a volatile session. The Dow, the S&P, they are both lower. Let's get right to the numbers. I'll give you the why in a moment. Here's where we stand. The S&P down 11 now, drop there of 0.3%. NASDAQ higher by 41 points, up by 0.4%. NASDAQ 100 index up 0.5%. The Dow slumping 88 points, down 0.3%. Dow Transports down by 0.7%. Russell 2000 down 0.6%. 10 years up 12.30 seconds. 10-year yield 0.73%. Gold down 1.5%. 18.93 the ounce. West Texas Intermediate crude up 2%. $40.22 a barrel. Keeping an eye on Eli Lilly shares. It says enrollment of participants in a clinical trial of its antibody treatment for COVID-19 has been paused because of a potential safety concern. That news sending Lilly shares down now by about 3.5%. Johnson & Johnson lower after the drug maker was forced to pause its late-stage study of a coronavirus vaccine, overshadowing an improved financial outlook for the year. And today we're seeing Johnson & Johnson shares slumping now by 2.27%. Well, just a week after his release from the hospital, President Trump returned to the campaign trail last night for the first time since contracting the coronavirus. He told thousands of supporters in Florida, mostly without masks, despite the ongoing pandemic, that he does feel great and glad he no longer needs to be concerned about infection because he is now, quote, immune. Dr. Amish Adalja is a senior scholar at the Johns Hopkins Bloomberg School of Public Health.
After a period of about 10 days, if you had a mild or moderate case, you likely have developed some levels of antibodies, although in the president's case, he has what are synthetic antibodies because he received the Regeneron product. But you're not somebody that's considered contagious to others. So there's a difference between contagiousness and immunity. Immunity is your ability to not be infected. Contagiousness is your ability to spread to others. And at this point, the president likely has some level of immunity and is no longer contagious to other individuals.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Facebook shares, they are trading higher now. Facebook says it will reject ads that discourage people from getting vaccines, citing a new policy meant to prevent harm to public health efforts. Facebook shares up now by just about 0.8%. Recapping equities mixed, S&P down 10, down 0.3. The Dow down 79, down 0.8%. NASDAQ up 44, that's a gain of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, along with Paul Sweeney, obviously spacing out for a moment. And this is Bloomberg. Oh my God, this is so easy. Paul Sweeney, you know who this is, right?
I know who it is.
Okay.
But I don't know the song.
That's okay. A little share for us.
Yes.
Dave Wilson, I think even maybe Alex Steele might have gotten Sheer. I don't know. No, probably not. No, probably not.
Well, who knows? I mean,
Paul
she's like a diva. I'm referring to Cher, that is.
Okay. Paul Sweeney, Alex Steele, who we love and adore, was, as you know, you work with her, but she could never get the song. And was it Zeppelin that she and Queen that
Stairway to Heaven.
Stairway to Heaven.
She did not get Stairway to Heaven?
No.
That's on like every rock radio station, top song of all time.
Exactly. And so we give her a really, really hard time.
Oh, rightfully so.
But of course, what's the title of this one?
House Divided?
Yeah, you basically it.
Well
in a house divided, so there you go.
That's early share. That's early share, right? Or is that after? Is that with Sunny or without?
That's without.
Yeah. Okay.
Yeah, in the early 70s, I was listening to AM radio in New York at the time, so that's probably the only reason I remember that one. But the house divided, kind of works as a concept because that's what the chart is about. And the divide is between the performance of home building stocks and bank stocks. I mean, builders have been setting records for months now. If you look at the S&P 500 industry index, and banks, shall we say, have not anything but, look at today with the way that the JP Morgan Citigroup have been falling, and it's more of the same. Just to give you an idea, as of Friday, when I put together this chart, I mean, the housing index was up 38% for the year.
That is just wild.
And the S&P 500 Banks Index was down 33%. So that's the kind of contrast we see. And Michael Hartnett, who's the chief global investment strategist at Bank of America, noticed what was going on, and then look back historically, and as the chart shows, the two groups tend to move together, which, if you think about it, kind of makes sense, because if an economy's doing well, banks are lending a lot of money. Among other recipients are people buying houses. So, this year's been a very different story. And the way he sees it, he wrote about this, like I say, on Friday, pardon me. I'm quoting here, either housing buckles or banks play catch-up. So in other words, he doesn't expect this kind of disparity to last. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net.
Well,
that's dwilson@bloomberg.net.
All right, so you guys, if you were betting men, does house buckle or do banks play catch up? Dave, what do you think?
Well, I'm glad I don't have to make that bet. I mean,
come on, live a little, Wilson.
It's going to go one way. Look, if a guy who's making this call isn't leaning one way or the other, far be it from me to think, oh, I can do that.
All right,
I'll throw my hat in the ring.
Okay, can I just? But that was a. Can I just?
That.
That was a cop out. That was a cop out. Go ahead. Go ahead.
I think you go long the banks if you have. If you have that 12-month scenario where we're going to get to the other side of this, some of these valuations, they're just extraordinary on the bank side. That's what we hear, but boy, it's awful tough to make that call right here.
Yeah, I'm just looking at Citi. I mean, you're looking at a PE of 9, forward PE. And I mean, you got a dividend with this puppy. Like there are reasons to be in it. It's down 45% this year.
Yeah, and Dave, how much of the housing stock movement is record low interest rates plus people just fleeing the cities?
Yeah, I mean, there's no doubt it's a big piece of it. Money's cheaper. There's demand to get away. So that's got to be part of it. I just saw a headline that I just got to mention it because I know our audience is going to care. The golfer Dustin Johnson dropped out of a PGA Tour event after having a positive test for COVID-19.
Oh, wow. Wow, and they thought golf was pretty safe, right? Because of all
it's done a great job.
Yeah, right?
I think it's only been less than a handful.
Oh, okay. All right. Well, Dave Wilson, thank you so much for the chart and the sports update for the day.
I do what I can.
I know you do. You always do. Dave Wilson's going to be along a little bit later on with his stock of the day. All right. Speaking of national news, also world news, let's check in with Nancy Lyons over in D.C. Hey, Nancy.
Hey, Carol. Supreme Court nominee Amy Coney Barrett says Justice Antonin Scalia was her mentor, but that she would be her own person if she is confirmed to the Supreme Court. She was asked about it today during her Senate confirmation hearing.
If I'm confirmed, you would not be getting Justice Scalia, you would be getting Justice Barrett.
Barrett was asked by Democratic Senator Dianne Feinstein if she shares Scalia's view when it comes to abortion rights.
Do you agree with Justice Scalia's view that Roe was wrongly decided?
Senator, I completely understand why you are asking the question, but again, I can't pre-commit or say, yes, I'm going in with some agenda, because I'm not.
Barrett also refused to say whether she would disqualify herself from any disputes over the impending presidential election. Senate Majority Leader Mitch McConnell says he will take a vote next week on a limited stimulus package that would replenish funds in the Paycheck Protection Program for small businesses.
We will go to the floor again Monday with another effort to try to get an outcome, even in the midst of this hotly contested election.
Democrats have pushed for a broader package. President Trump reacted to the news by tweeting today, "Stimulus, go big or go home." World Trade Organization arbiters say that the European Union can sanction up to $4 billion in U.S. goods over Washington's illegal support for plane maker Boeing. It amounts to one of the largest penalties handed down by the WTO. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. Really appreciate that. So Dave Wilson just talking about the diversion between bank stocks and housing stocks or home builder stocks, which is, pretty wide right now. They tend to, as he said, trade in tandem. A couple stories, Paul, that caught our attention. One from Dow Jones, Wall Street Journal, another from our own Noah Buhire here at Bloomberg. The Wall Street Journal, though, talking about apartment rents rising in suburban markets across the U.S. We know about the city dwellers looking for bigger spaces in smaller towns. Some of it has to do with just getting out of cities because of the virus, right? Everybody is like, okay, if it's not safe here, let me go somewhere where it is safer and also I have some more space. But it's also about companies saying, listen, you don't have to work in the city anymore. We're seeing that certainly out on the West Coast in Silicon Valley. You can kind of live wherever you want and you can work from home.
Yeah, so it's really interesting. I've seen stories over the last several days really about this issue, and obviously a lot of folks want to get out of cities, want to go to suburbia, less density. That makes sense as it relates to the pandemic. Now some of the employers in Silicon Valley are saying, oh, but by the way, if you want to leave Silicon Valley because it is so expensive and relocate to, somewhere that's Denver, Colorado, or someplace with a lower cost of living, that's fine. Mm-hmm. But we need to have a conversation about us lowering your compensation to reflect that.
Boy,
so those are some difficult discussions.
Don't you? How quickly that happened?
Yes.
It's like, okay, you can work, stay at home forever, and it's like, all right, tick, 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 tick. Oh, and by the way, we're going to reduce your salaries, which is kind of wild. As part of this, there's some great numbers in this story from Dow Jones. They say rents in central business districts in popular cities have been tumbling. San Francisco rents are down 17% since the March peak. They've been the hardest hits. Let's see. District rents are down 9.2% in Boston, between 5 and 6% lower in New York, LA, and Philadelphia. And at the same time, if you look at the median monthly rate for a studio in San Francisco, it is down 31% in September from a year earlier. Those are big changes.
Those are big changes, and they're pretty quick changes, aren't they? We're 6-7 months into this pandemic, and we're already seeing the immediate impact, really, on some of these longer-term rents.
Yeah, no hesitation there, that's for sure. All right, you're listening to Bloomberg Business Week right here on Bloomberg Radio.
News, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are dropping with stimulus on hold. Banks are tumbling after earnings. Right now we have got the Dow, the S&P. They're both lower. NASDAQ higher. 13 minutes to go ahead of the close with the S&P down 14. Drop there of 0.4%. The Dow's down 104 right now, lower by 0.4%. NASDAQ higher by 23 points, up by 0.2%. Has been a volatile session. Going to be very interesting to see if NASDAQ does close with gains. NASDAQ 100 index up 0.3% today. Dow Transport's down 0.7. 10 years up 13.30 seconds. 10-year yield 0.73%. Gold down 1.5%, lower by $28 the ounce at $18.94. And West Texas Intermediate crude rallying 2%, $40.21 a barrel. Recapping mixed day on Wall Street. S&P down 15, down 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 12 minutes left in today's trading session, and it's certainly been one where we've seen more of a risk-off trade today. Let's get into it with our next guest, Kevin Miller. He's Chief Investment Officer at Evaluator Funds, and he's on the phone from Minneapolis. They've got roughly $635 million in assets under management. Kevin, nice to have you here with Paul and myself. I got to first ask you about Minnesota. The virus numbers are going up. How are you? And how's your team?
Yeah, everybody's doing well. Thank you for asking. Thank you for having me on this afternoon. We thankfully we're in a good position for everyone to be able to work from home and not have to commute and be able to safely socially distance. And so from a corporate perspective, we've been doing real well.
So, Kevin, the market's been doing real well as well, although today a little bit unsteady here. It seems like the market is factoring in that the political risk, which as recently as several weeks ago was kind of a negative, a headwind for this market, now it seems like the market's saying, all right, we're not going to have a contested election. It looks like Biden will win. He may even bring the Senate along with him. Is that kind of how you're factoring into your outlook?
Well, that's the $10,000 question, right? I mean,
I only ask the good ones.
How are we going to play this? I see three outcomes. Obviously, one, a clean and clear Democratic win, two, a clean and clear Republican win, or three, a contested outcome. And quite candidly, I'm still thinking that there's a contested outcome. But once that gets resolved, and if that is the case, we anticipate the market to pull back maybe 5 to 8%. And then, once this gets resolved, we still see 2021 as a very strong year, pretty much regardless who's in the White House, just because if Trump's in the White House, we expect to see tax cuts and stimulating the economy through that mechanism. And then if Biden's in the White House, we anticipate an increased spending and get stimulation through that. But then 2022 and beyond that, then we have to look to see what new policies are put in place and how that impacts the economy and the markets, et cetera.
So I demoted you. Don't tell your chief investment officer, and I realize you're CEO, so forgive me for that, Kevin. But I do wonder, so it sounds like the election outcome, you're not really too worried about what it means, at least for the 2021 year.
That's right. I think, if anything, it's going to give us an opportunity to deploy more assets. We will probably start pulling a little bit off to the sides here latter part of this week. And, what's the worst case scenario that, we miss it and the market, stays flat or even goes up a little bit? The probability of that happening, that's a small loss compared to seeing our accounts pull back maybe 5 to 7%. And we think we can redeploy at that point.
All right, so what kind of sectors or names If we do get an entry point, should we be looking at, Kevin?
Well, I don't think you want to be playing games right now. You want to get good, steady, strong companies that have strong balance sheets, good cash positions, things that will perform well for, we're all not back. The economy's not totally reopened yet. So I know this is it's maybe somewhat boring, but three that I like are Microsoft, Walmart, and Visa. All three have great cash positions, great free cash flow, very established in their industry, highly recognized, and they all bring certain elements and diversification to their services that others in their area may not be quite as capable of.
So on any pullbacks you're at it, you would add to those positions? Is that what you would suggest?
That's correct. And, if someone is just I got this asked the other day, I have some money I want to get in, what should I get in? Well, I always tell people, divide how much you want to invest in a stock or a fund, an ETF, divide it into thirds, put a third in right now, give yourself some opportunity for a pullback at a level that you're comfortable with, 5 to 10%. Redeploy the other third. If that doesn't happen within a set period of time, let's say 2 to 3 months, then redeploy the other third, and then do the same for the last third, and get yourself fully invested maybe 6 months down the road. That seems to work easier for people to walk into the market when we're at very close to all-time highs.
Yeah. Hey, listen, though, let me ask you about Microsoft, because they've had quite a run. They're up 42% this year. I mean, so... Again, I said, would you buy and pull back? Would you buy it now or no? Again, you'd wait for that pullback.
Well, we currently own it, so I would just wait for the pullback. And I have such a high level of belief that there is going to be a pullback. I would tell anyone right now just to wait. Give yourself a month. Worst case scenario, it goes up a little bit from here, and you miss out on that, as opposed to taking advantage of a pullback. Yeah.
Well, Kevin, I'm going to pass along your entrance strategy to one Tom Keene, who is famously in a triple leverage all cash fund right now, and he's looking for an entry point, so I'll pass your strategy along. How about for those, Kevin, that maybe have, they can afford, from a time frame perspective, to look to the other side of this pandemic? Is it time for those folks to maybe rotate a little bit into some more cyclical names out of maybe the Microsofts, the Visas of the world?
I would give it till late Q1, early Q2 of next year. There's going to be plenty of upside. There's going to be plenty of opportunity. You know as well as I do that the majority of this market has been carried by 6 to 7 individual stocks. So there's still a lot of stocks out there that have yet to perform, and there's no sense in getting too aggressive. Let the market play out and then take advantage when that opportunity presents itself.
Hey, one last question. I mean, you've got, I think, 6 managed evaluator mutual funds, and it's all about different risk tolerances. So I am curious, what funds are doing the best this year? You've got from very aggressive to very conservative. Which are the outperformers? And just got about 40 seconds here.
Yeah, thank you for asking. Relative to, we compare those investments to their Morningstar peer groups, and relative to the Morningstar peer groups, we're really, really doing well. We pivoted heavier into equities on March 19th. We took some gains off the table in early July. We pivoted some of the domestic equity over to internationals in early August. We pulled those back in September after the second wave looked like it was coming. And so we're doing very well, but the fund that's probably performing the best, that's most popular and most heavily used, is the growth fund. And our funds have a percentage range in the naming convention. That one is 70 to 85%. So that one will always have at least 70% in stocks, but never more than 85%.
Are names like Facebook and Amazon and Netflix in that one?
Oh, yeah.
I thought so. Just a, safe guess there. All right, Kevin, thank you so much. Kevin Miller, he is Chief Executive Officer of Evaluator Funds, about $635 million in assets under management, on the phone from Minneapolis. Stick around, folks. We've got the closing bell in just a moment.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Tuesday, October 13th. The Dow, the S&P, and NASDAQ all trading lower. It was a volatile session, choppy session for the U.S. stock market. Folks from ProShares, by the way, virtually ringing that closing bell. Stocks lower on speculation that recent gains have outpaced prospects for a quick end of the stalemate over fresh stimulus. Treasuries and the dollar climbed. Today we had the 10-year, the yield there, 0.72%. Your closing numbers, S&P down 22, down 0.6. The Dow dropped 157, down 0.6%. NASDAQ lower by 12 points, a drop there of 0.1%. Not just stimulus on the minds of investors, but also the election and what it will mean for the market outlook. Kevin Miller is the CEO of the Evaluator Funds. He was our guest moments ago right here on Bloomberg Business Week.
You know, once this gets resolved, we still see 2021 as a very strong year, pretty much regardless who's in the White House, just because if Trump's in the White House, we expect to see tax cuts and stimulating the economy through that mechanism. And then if Biden's in the White House, we anticipate increased spending and get stimulation through that.
On a down day for the rest of the market, the Walt Disney Company moved higher. It is shaking up its operations to refocus on the thriving Disney Plus business, redoubling its push to become a global streaming giant like Netflix. We saw the Walt Disney Company advance today by just about 3%. After earnings, JP Morgan Chase showed that a surge in trading is holding up, and so are borrowers. The biggest American bank is in the third quarter under the shadow of the pandemic. It did post a surprise increase in earnings. And Citigroup moved lower today after the bank reported a jump in costs and warned it now expects a slower economic recovery. Today we saw JP Morgan Chase down 1.6%, Citigroup down 4.9%, Bank of America, Wells Fargo, Goldman Sachs report tomorrow. Recapping S&P down 0.6%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle. Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
All right, everybody, time to take a look at some of the stocks on the move, talk a little bit more deeply into today's trade. Carol Masser, along with Paul Sweeney, and also Bloomberg News cross-asset reporter Sarah Ponzak, just kind of going down my list here of everybody. Let's talk a little bit about the trade, Paul and Sarah, because if I look at the S&P 500, 134 names higher today, 370 lower, one unchanged. Major industry groups, we saw a lot of selling. The only groups that had a little bit of a gain, communication services up about 1/3 and consumer discretionary, a little bit higher, but call it essentially flat. Everything else was down across the board. Financials, the worst performing group, down 1.9%. So let's bring you in, Sarah, because the banks, I mean, we started earnings and we heard from the big banks here.
Right. This was not the most exciting start to an earnings season, you could say, especially if you take your cue from price action. Like you said, financials, your worst performing sector in the S&P 500. Banks, your worst performing industry group, down 2.7%. Now, if we look at the names that actually reported today, so JP Morgan, Citigroup down near 5%, JP Morgan down 1.6%. These companies did both report loan loss provisions that were smaller than expected. So that was seen as a positive. However, at the same time, what analysts were attributing these declines to was more so what their results said about the economy. For example, Citigroup shares declined after the bank not only reported a jump in costs, but it also warned it now expects a slower economic recovery. Similar for JP Morgan, it said that the reason that those loan loss provisions were so much smaller than expected was actually just due to some changes in the loan portfolio mix, not due to its changes or a broadening of optimism about the economy. So that is what some investors, some analysts are looking at, but certainly not the most exciting start to the earnings season.
But when we're in a vacuum, right, Paul? I mean, when these CEOs talk, especially the big bank CEOs, it says a lot about kind of where we are or where we're not.
It really does, and I think these are the companies that really have their finger on the pulse of kind of what businesses are doing. Are they borrowing? Are they growing? Are they investing? And Sarah, I'm looking just at the year-to-date price target. or price performance. Boy, Citigroup's really underperforming its peers, which I consider to be like a J.P. Morgan, Bank of America. Really some problems there, and the market's unforgiving.
Right, and within a sector that has also been unforgiven by investors. You look at the sector breakdown in 2020. Meanwhile, while you have technology companies up more than 30%, financials are your second worst performing sector in the S&P, down still 18%, more than 18%. So to see that dispersion is really mind-boggling and pretty amazing to see. And when people talk about that K-shaped recovery, you see it right there. You see one area of the market really taking it sky high in the midst of COVID-19, whereas another one is still facing issues. And of course, we do have to look at the bond market too. We did see yields move even lower today. Remember, just recently, the 10-year was testing 80 basis points. Now we're headed back towards 70 basis points, it looks so. And those low interest rates are definitely not helpful for the banks.
So let's talk a little bit about also the hospitality industry, and not hospitality, but really the airline industry. But I feel like Delta, we know that all the airlines have been under so much pressure because nobody's traveling, but Delta had a very specific story today.
Delta did have a very specific story. So Delta missed on revenue, and their adjusted loss was also wider than expected. Now, on top of that, Delta said that they are delaying aircraft purchases that were worth more than $5 billion through 2022. So they're putting that at hold, and yes, what they announced, their earnings, was definitely not helpful to the share price. But at the same time, I want to point out the fact that we have the J&J trial, and Johnson & Johnson did also report earnings, but that we have their trial on hold. We also have news of Eli Lilly coming out, and their antibody trial has now been paused due to safety concerns. That is not positive for the recovery trade, which is very much focused on airlines, cruise lines, hotels, and it wasn't just Delta that took a hit today. I'm looking at the worst performing stocks right now in the S&P 500, and really at the top of that list is your cruise lines, Royal Caribbean, Norwegian, Carnival, for example, all down more than 7%.
Yeah, they were just beaten up big time, and I know they didn't Royal Caribbean do some kind of, was it a stock issue or bond issue, convertible issue or something, and I'm not sure that things went necessarily how everybody thought, but we've seen certainly those names get beaten up big time. Hey, Sarah, thank you so much. Bloomberg News cross-asset reporter Sarah Ponczak joining us in our Bloomberg Interactive Brokers studio. You are listening to Bloomberg Radio.
All right, Dave, you're up. Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson. Open up the doors, Dave! Who? Dave! Hey,
Hey, Mr. Wilson. Dave Wilson is back with his stock of the day. Dave, what do you got for us?
MoneyGram International, Carol. It's a money transfer service that operates in more than 200 countries and territories worldwide. The company traces its history back to 1940 when a predecessor was founded. MoneyGram has been publicly traded since the 2004 spinoff. The ticker is MGI. The company's shares plummeted 97% over 2 years, 2007, 2008, and never recovered. This year, they set a record low in early April. MoneyGram rallied from the low with help from growth in its digital payment network called MoneyGram Online. The service is available in more than 75 countries and accounts for more than a quarter of the company's transactions. The number of cross-border transfers through MoneyGram Online has more than doubled every month since January. And today, the company disclosed that the streak was extended last month. September's transactions soared 161%. MoneyGram's growth propelled its shares to their highest price since last October, and they closed with a gain of more than 20%.
You know, you say MoneyGram, and I think Landshark from SNL. Don't you think? I don't know. Maybe I'm just crazy, Paul.
Yeah, and you're dating yourself, Carol.
That's okay.
That's one of the early years of SNL, but it's a classic.
I had older siblings, so I was watching all of this stuff. Good stuff, Dave Wilson. Thank you so much. I mean, an interesting name. Like Money, it feels like such an old-fashioned name, but a lot of people use it.
Yeah, absolutely. And you think we talk about remittances back to, say, Latin American countries and how that's such a big part of the GDP for many of those countries. And you see MoneyGram. I mean, that's one of the ways the money flows.
Right, Dave?
Absolutely.
Oh, I thought Dave maybe hit a little bit more there. Okay. All right. It's Wacky Tuesday. All right, Dave, thank you so much. You're listening to Bloomberg Business Week. All right, let's get another check on world and national news headlines. Over to Ed Baxter we go in San Francisco.
Hey, Carol. The Supreme Court confirmation hearings focus on divisions between the parties and some definitions of where nominee Judge Amy Coney Barrett will offer answers. First, the Democrats' fears are expressed by Senator Sheldon Whitehouse.
That's where the Republican Party platform tells us to look at how they want judges to rule, to reverse Roe, to reverse the Obamacare cases, and to reverse Obergefell and take away gay marriage.
Now, so, on the subject of Roe v. Wade, Coney Barrett said she could not talk case specifics, but
The substantive due process clause says that there are some liberties, some rights that people possess that the state can't take away or can't take away without a really good reason. So the right to use birth control, the right to abortion are examples of rights protected by substantive due process.
on the ACA,
I am standing before the committee today saying that I have the integrity to act consistently with my oath and apply the law as the law, to approach the ACA and every other statute without bias, and I have not made any commitments or deals or anything like that.
and whether she would recuse herself from cases that could settle the election.
If I were confirmed and if an election dispute arises, both of which are ifs, that I would very seriously undertake that process and I would consider every relevant factor. I can't commit to you right now.
And the confirmation process continues into tomorrow. A network outage has brought Virginia's voter registration system to a standstill. The last day to register there, so it's critical. A cut cable near a technology center. And New York City, which is trying to stamp out stubborn waves of COVID-19, has issued $150,000 in fines and summonses over the weekend. In San Francisco, I'm Ed Baxter.
All right, Ed, thank you so much. Man, Paul, it's getting tough out there when it comes to the virus.
It really is. Cristiano Ronaldo, soccer superstar, he tested positive, and he's in isolation right now. So you think about these athletes, that have been put in varying degrees of a bubble. You think about the NBA and the NHL had such success, but everybody is kind of dealing with it in different ways around the world in terms of some of these professional leagues and college sports ramping back up again. So I guess the takeaway is there will be positive tests. It will happen. You just have to try to manage it. But when somebody like Cristiano Ronaldo tests positive, it gets people's attention.
Well, it does. It definitely does. And I think the difference is, and we talked about this a lot on air, is, in March and April, we didn't have a playbook. Everybody was just kind of learning as they were living it. And that is obviously why it was just so difficult, right? And I feel like at this point we have a little bit of a playbook, whether it's the medical community, whether it's, the corporate community, whether it's just the world at large. And so when we start to see these hot spots, I actually think, I say to my daughter, actions have consequences. When there's penalties, if you can't get people to just do it voluntarily, well, then maybe there needs to be some kind of penalty to get people to wear masks, to do social distancing, because we know that those are so simple, but they keep people safe.
They do, and certain people are seem to be doing a better job than others. But I think just here in the Metro New York area, as you said, we were hit so hard in that first wave in March and April. I think most people around here have got the message. As I think about, I'm walking around my town. There is very, very good mask wearing.
Very little? Did you say very little?
No, very good. It's very good mask wearing. Yeah.
Yeah, same here on our end. And I feel like anywhere in the New York Metro that people, they get it. And it's just become kind of a norm. If I walk out without a mask, if I walk out the front door, I feel like, okay, wait, I'm missing something. Like it's kind of got that seatbelt kind of thing where, if you don't have your seatbelt on, you feel like, okay, something's
exactly
missing.
Right. Good analogy there, yeah.
All right. You're listening to Bloomberg Business Week. Carol Massar, Paul Sweeney on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It was a down day on Wall Street today with the Dow, the S&P, and NASDAQ all declining on a stimulus deadlock. We had banks tumbling today. Among some of the bank names, we saw J.P. Morgan Chase down 1.6%, Citigroup down 4.8%, Bank of America, Wells Fargo, Goldman Sachs, they'll all be reporting tomorrow. Complete coverage, of course, right here on Bloomberg Radio. S&P fell 22 points, down 0.6%. The Dow down 157, lower by 0.5%. NASDAQ slumped 12 points, down 0.1%. 10 years up 15.30 seconds, 10-year yield 0.72%. Gold down 1.6%, 18.92 the ounce, and West Texas Intermediate crude rallied 2% today, back above $40 a barrel. WTI now at $40.20. Tough day for a lot of the cruise name stocks today. Royal Caribbean shares sank after the company said it's raising $1 billion between stock and convertible bonds. It is the latest capital raise as cruise ships may stay docked for the foreseeable future. Today, Royal Caribbean shares plunging 13.2%. Among some of the other big well-known cruise brands, Carnival Corp down 7.8%, Norwegian Cruise Line Holdings down 8.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. Well, we had some news, like we always do every day, on the virus. Eli Lilly, Charlie mentioned this, putting its government-sponsored antibody test on hold due to potential safety concerns. And that came just hours after J&J paused its COVID-19 vaccine trial because of a participant's unexplained illness. So, excuse me, getting a little caught up here. And that's kind of the way it goes when it comes to creating a vaccine or the path to a vaccine. Let's get our daily check on the virus. Dr. Matthew Foley is vice chairman and associate professor at North Shore University Hospital. He manages Northwell Hospital's emergency unit and has been on the ground since the beginning of the pandemic. Northwell is a massive hospital system, I should say, in the city. And Dr. Foley joins us on the phone in Manhasset, New York. I mean, you guys, we've talked to a lot of members of your team, Dr. Foley. You really have been front and center on all of this. So I've got to ask, what are you seeing as we watch numbers start to tick higher? Certainly, we're seeing it around the country, but we're also seeing it here in New York.
Yeah, primarily at our facility and some of our facilities in the system, we have seen a very mild uptick in hospitalization over the last really 1 to 2 weeks. But, extremely mild. We had hospitals full of COVID patients previously, and now we're, a minimal percentage of our hospitals. Still, the far majority of our cases are non-COVID patients.
So, Dr. Foley, we've all been talking about since almost the beginning here the potential for a second wave as we get into the colder months. A, just give us your sense of how much of a risk is that, and B, are we in a better position to deal with it?
Yeah, I don't think anybody really knows how big of the risk is. We are preparing for it, and because we have seen a slight increase in hospitalizations and a slight increase in patients visiting the emergency departments with COVID, we're monitoring it closely. We're definitely much better prepared this time around because we've experienced it once where we've had to expand our facilities and really rearrange our emergency departments and the departments within our hospital to sustain a surge where pretty much many of our hospitals were completely full. So we have prepared after the initial scenario for a second wave. We don't know if we're going to see it or if we see it, to what extent it will be. But right now, very, very manageable, and we don't know what's going to happen in the coming weeks.
Well, Paul and I yesterday talked a lot about herd immunity, I keep saying herd mentality, herd immunity when it comes to COVID-19. And I do wonder, Dr. Foley, have we learned anything from the protests that we saw in New York after the killing of George Floyd in Minneapolis, and of course the subsequent protests that were here in New York and around the country? Have we learned anything about, the rise or lack thereof of cases after that, and maybe what it says about herd immunity, at least in maybe the New York metro area?
I don't know if we learned anything definitively, but I think it was, it suggested something. I believe that's the case. I mean, it was a great social study of when a bunch of people are outside protesting in close quarters, and some of those protest people were wearing masks, and some of them I saw they weren't. So we would have thought we would have seen a bump from that, and we really didn't. So whether that suggests that there was a herd immunity, I'm not sure. I think the question is really underlying how many people were infected in New York City at that time. At the beginning, we knew the mortalities that were going on, but we had very limited testing. So we didn't get a prevalence in the New York City area. What, not seeing a bump after the protest suggests that, yeah, maybe it's quite possible. There was a lot more people infected than we thought there were, and there might be a herd immunity. There's also a question among the experts, how many people actually need to be infected, or what percentage of the population to get that herd immunity. So there's a couple of variables out there that we're not sure of, but I think you're right. I think that showed us something. I just don't know what it definitively says.
Hey, Dr. Foley, I see President Trump at these rallies, mostly in states that have loose or laxer laws as it relates to social distancing and masks. How risky is that behavior? It just looks like it's a recipe for disaster. Not to mention a lot of football games I noticed. There are a lot of people in the stands at some of those college games.
Yeah, I work in a hospital, and I work with our infectious control people, and that's really not my wheelhouse. But in a facility, I mean, this isn't something we would advise with a person with a recent infection going out and being around a lot of people not wearing a mask for that person's protection and other people's protection. I'm probably going one step further. We saw, in the news, how many people in the president's surroundings that were infected and confirmed infected. We don't know the people that might have been infected that we don't know. I'm only presuming that a lot of those similar people are going to be at some of these functions too. So it seems a bit dangerous, especially being the time out. We wouldn't operate that in a hospital for infection control, definitely.
Dr. Foley, hang on for a second. We're going to go do a little bit of news, and then we'll come back and continue the conversation. We're speaking with Dr. Matthew Foley. He's vice chairman and associate professor at North Shore University Hospital, and he manages Northwell Hospital's emergency unit. So they have been seeing everything related to COVID-19 from day one, certainly here in the New York metro area. So we'll come back, because I'm curious, too, about treatments and these pauses in trials, what it says about the path to a vaccine, Paul. So we'll get to that in just a moment. You're listening to Bloomberg Business Week. Carol Master, Paul Sweeney, and this is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, it is Bloomberg Business Week. It is Tuesday. Carol Messer along with Paul Sweeney. We're going to continue talking with Dr. Matthew Foley. He is a vice chairman and associate professor at North Shore University Hospital, and they've got an interesting respiratory device, too, that they've been developing, Paul. So we're going to talk a little bit about that.
Yeah, I think it's really interesting. The interesting thing to me is it's non-invasive respiratory device, and that's so important for those patients.
All right, so we'll hear a little bit more about that in just a moment. Let's get back to your top business stories and the world of trading. Here is Charlie Pellet.
Hi, thank you very much. It was a busy day on Wall Street, volatile session. We had the Dow, the S&P, and NASDAQ, though, all declining today. Stocks fell on speculation that recent gains have outpaced prospects for a quick end of the stalemate over fresh economic stimulus. Here's where we ended the Tuesday session. The Dow down 157 points, down 0.6%. S&P down 22 points, down 0.6%. NASDAQ slumped 12 points, down today by 0.1%. Spent much of the session, most of the session, in fact, swinging between gains and losses. NASDAQ 100 index little change, down by 0.04%. Dow Transports today down 0.8%. 10-year up 14.30 seconds, 10-year yield 0.72%. Gold down 1.6%, 18.91 the ounce, and West Texas Intermediate crude up 1.9%, $40.17 a barrel on WTI. Now, as for the overall mood of the market, Jim Paulson is Chief Investment Officer at Luthold Whedon.
There's a lot of nightmarish scenarios booked into things, and if it turns out that the reality is a little better than your nightmare, then I think there's a lot of revision that has to go on, and that revision will be a very positive force for the markets and for the economy.
Boeing is nearing 1,000 scrapped or impaired jetliner orders this year, failing to notch any sales in September. Boeing shares tumbling today by 3.1%. Johnson & Johnson lower after the drug maker was forced to pause its late-stage study of the coronavirus vaccine. Johnson & Johnson down 2.3%. Eli Lilly has paused enrollment of participants in a clinical trial of its antibody treatment for COVID-19. Lilly down by 2.9%. Disney shaking up its operations to refocus on the thriving Disney Plus business. On a down day for the rest of the market today, we did see the Walt Disney Company did see its shares advance by 3.2%. Recapping, S&P down 22, down 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pello, thank you so much. We appreciate it. And Carol, again, there is that concern here as we go into the late fall, into the winter, of a second wave, if we will, of the virus. But the hope and I think the expectation of many is that our fine healthcare providers, the frontline doctors and nurses, the real heroes here, they've learned a lot from that first wave. Totally. Maybe some new new types of procedures, and that can really help us out. Dr. Matthew Foley joins us. He comes back for another segment here. Dr. Foley is Vice Chairman and Associate Professor of North Shore University Hospital, joining us on the phone from Manhasset, New York. Dr. Foley, talk to us about Inhale. We know that's something that you folks at the North Shore University have been using. It's a new respiratory device. Talk to us about that and how that may benefit patients.
Yeah, we didn't develop the device. It's actually just an extension of what we use in hospitals all the time. We use non-invasive ventilators for people that don't need to be on a ventilator with a intubation. And so this is really a non-invasive device. And the problem with these, or medical devices in general, is they're really, really expensive. And this company produced a product called Inhale that's a lot less expensive, so that we can bring a treatment that we use in the hospital and prescribe it for at home. And it's something I'm very keen to do, and have been working to try to procure the device for quite some months. And we're able to do that, and I'm going to hopefully prescribe them for people in the home as needed, which will be great, in my opinion. I think we'll be able to save some people from being in the hospital when they can be treated at home and safe. Sometimes it's safer for that patient to be at home And this device gives us the ability to do that. I hope it catches on.
Well, help me a little bit to understand. Part of the things I love talking about to members of the medical community is you explain everything that's going on in COVID-19, do the deep dive. So invasive versus non-invasive, right? A non-invasive is always better. It's easier, I'm assuming, on a patient. Is that the main benefit here, or explain it to me a little bit?
Kind of. It's not always better. There is definitely times when invasive ventilators are absolutely needed, and it's generally with the severity of the disease, the more severe the disease. But an invasive ventilator is actually a tube that's put down into the trachea, and then the ventilator is hooked up to that. Ventilators have complications just like any other treatment may have. And a non-invasive ventilator, it doesn't have that tube going down in the trachea and just kind of puts a cuff around the mouth. So is a little bit safer, has decreased complications with it, and provides some of the same treatment. So depending on the patient, it can be really, really effective. I mean, since we really started using non-invasive ventilators in the hospital, we save a lot of patients, especially in the emergency department setting, from advancing to invasive ventilation and decreasing a lot of the harms from that. But,
So
at times you definitely need that too.
So is this something that improves the outcome ultimately of patients, of COVID-19 patients?
That is a great question. I was intending to study that early on, but we really couldn't get this device out in people's home early on. Now we're able to, and we just don't have the surge. So while I don't hope for another surge, I think there's quite a potential to improve outcomes, improve definitely morbidity and hospitalizations, rehospitalizations, and potentially mortalities. That's my prediction, but I really don't have any evidence of that yet. Other countries have used it much more than we have, but not necessarily at home because it just hasn't been cost effective to do it. It's such a costly device, which this company has made, and which we can now move into the homes with it.
Dr. Foley, just real quickly before we let you go, how is your team doing? The frontline workers there, they've sacrificed so much. They're put in such tremendous efforts. How are they doing?
I think very well. You know, everybody here really appreciates everybody's thanks and, you know, likes to be leaned on when needed and likes to be that source. Also a bit nervous. You know, we don't know what's going to happen in the next coming months. You know, we're here to serve and care for people, but also hopeful that we don't see the increase in the surge that we had in the spring.
Yeah, it certainly feels like we're all just kind of crossing our fingers and just hoping that we don't see that again and revisit it. Dr. Matthew Foley, thank you so much for your time today. Vice Chairman and Associate Professor of North Shore University Hospital, and as I mentioned earlier, he does manage North Wales Emergency Unit and, you know, has been seeing everything from day one when it comes to COVID-19. All right, let's get another check on world and national news. Ed Baxter, what's up?
All right, Carol, COVID-19 become the Grinch that stole Halloween. In California, at least, state's top health official, Dr. Mark Galley, says while trick-or-treating may not be banned,
some of the traditional Halloween celebrations, such as parties, door-to-door trick-or-treating, we know pose a high risk of spreading COVID and are therefore strongly discouraged.
He says do it at home or virtually. New York City has issued $150,000 in fines and 100 summons over the weekend, most targeted in the hotspots where there's been great resistance to isolation policies. Virginia Governor Ralph Northam says he will push to get voter registration deadline extension. This after a major system went down because of a cut cable. The governor says a lot of people in any event have voted so far.
As of yesterday, more than 550,000 Virginians have voted early in person.
And by the way, he says he and his wife are now virus-free. Senate confirmation hearings today with questions. Judge Amy Coney Barrett answering questions about her positions on ACA.
I'm not here on a mission to destroy the Affordable Care Act. I'm just here to apply the law and adhere to the rule of law.
And not recusing herself on any election ruling, but saying she will consult with other justices and make a decision on due process.
I want to be very clear for the record and to all members of this committee that No matter what anyone else may think or expect, I have not committed to anyone or so much as signaled. I've never even written.
She also would not commit to any rulings on abortion, saying there are certain guarantees for birth control in state jurisdictions themselves. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Mr. Baxter, thank you so much. This is Business Week. Carol Messer along with Paul Sweeney. And Amazon Prime Day started today. Did you buy anything?
I did not buy anything, but again, what's a Prime Day? It seems like every day is a Prime Day. I'm literally
in your house.
Yes, you just drive down the street and you look at front doors, and it's the vast majority of those doors have a package in front of them every single day. And you drive on a highway. Like I just drove out to Pennsylvania last weekend on Route 78.
Yeah,
every fourth or fifth truck is an Amazon truck.
Yeah.
I never saw that before.
Yeah, that is pretty wild, right? If you want to get an idea of what's going on.
Yeah.
I agree. And listen, what's interesting, this story by on the Bloomberg by Spencer Soper, Jordan Holman, and Henry Wren, it's all about, Prime Day kicking off today. It's 2 days. And what this story talks about is how it's giving maybe Amazon a little bit of an advantage ahead of the holiday season, and an advantage over brick and mortar, who still think, right, Paul, even though we keep saying it's online, that's where the growth is, people still think about Black Friday.
They do. They do. And it's still an event. It'll be obviously less so this year. But, when you talk to retailers, bricks and mortar retailers, they talk about omni-channel. Being everywhere, having a bricks and mortar opportunity, having an online offering, having pickup in store as you meld the two, and omni-channel is kind of where a lot of the existing traditional bricks and mortar retailers are hanging their hats on in terms of the future.
I just can't believe, like I've already seen it on air where you're starting to see holiday shopping things. I mean, we haven't even had Halloween, and I know it, they talk about kind of this Christmas creep, right? And it just becomes sooner and sooner and sooner. And I guess this year will be interesting because I haven't been, I'm not a big mall shopper, but I haven't really been anywhere in any kind of retail since March.
Yep.
And anything we've bought online, and it definitely has cut down. We've ordered certain kinds of things more, but a lot of things less. I don't know if that's true in your household.
Yeah, absolutely. And I think we're going to find consumer behaviors permanently changed in a lot of ways, and retail might be one of those.
Yeah, it's amazing. All right, this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story headline from the Bloomberg Professional Service. Supreme Court letting the Trump administration end the census count early. It was a down day on Wall Street today. The Dow, the S&P, and NASDAQ all moving lower on stimulus deadlock concerns. S&P slumped 22 points, down 0.6%. The Dow down 157, down 0.5%. NASDAQ down 12, a drop there of 0.1%. 10-year up 14.30 seconds. 10-year yield 0.72%. Gold down 1.6%, $18.91 the ounce. And West Texas Intermediate crude up 1.8% at $40.17 a barrel on WTI. And one additional headline to pass along in the world of sports. Tampa Bay Times says the Florida Gators will be halting football activities due to COVID. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Remember when you said football was doing okay, Paul? It's not doing
Well, it's
so
interesting.
good.
This was the coach, I believe, or maybe it was Florida State's coach. One of the Florida coaches said, next week, I think it was University of Florida, we want a full Gator stadium, none of this 25% thing.
That's crazy. I mean, it's just crazy. It's crazy. All right. Also crazy was what we got from Apple today. Big day for Apple. Its biggest product launch event of the year. I'm super excited because finally going to get a new phone. Our Apple guru, my whole family, we've been waiting for this. Bloomberg News technology reporter Mark Gurman joining us right now on the phone from LA. Mark, so what did we get?
Thank you for having me.
Yeah.
We got 4 new iPhones, all with 5G, as expected. The big news, I think, definitely is that 5G capability, and Apple really tried to reassure consumers that 5G is here and ready for these devices. They talked up their testing across 100 carriers. They talked up their special sauce with software to really get the most out of 5G. So they seem fairly confident that this is going to happen in real time. People are going to be upgrading pretty quickly.
Are they right? Because you had a story, I think, on the Bloomberg, questioning whether the networks are really all ready for 5G. So are we ready?
No, I don't think so.
Okay.
But they're not going to. Yeah, they're not going to come out and say this thing is going to stink, right?
No.
So what they've done here is they've done the best they could, and they've basically lit the fire under the carriers to get their act together and make this thing work, right? Right now, given Verizon's announcement today, you have nationwide 5G, so to speak, from the 3 big carriers, the merged Sprint, T-Mobile, Verizon, and AT&T. The problem is their speeds are not much faster than 4G. Where you really get the big speed leaps is through ultra-wideband technology.
That's Apple calling to complain, Mark, and say, wait, we're ready. Everything's ready.
That's funny. The ultra-wideband technology. And that is what Verizon uses. But right now, they're in a very, small amount of cities at this point. So I think it's going to be a year at least until you're seeing, further growth on that ultra-wideband network.
So, Mark, does 5G represent potential for a, what a lot of Apple folks call a super cycle in replacement? Or is a master household just a one-off?
I think there's going to be a super cycle there. Right now, you're seeing 4 new devices. You're seeing lots of people hanging on to iPhones for longer. The last big redesign was 3 years ago. So I think this is going to be a significant upgrade for a lot of people, and you're going to see that spur a lot of upgrades for sure, especially on this wider range of price points.
Will we be excited? I mean, we have been waiting, to be quite honest, for 5G, and so we keep just putting it off. And waiting for a substantial upgrade. I mean, this is it, right? I mean, there'll be a difference.
This is the update. This is the one that people have been, waiting for a number of years. And the amount of price points and screen sizes and variations they have this year is, unprecedented for anything they've done on the phone space in the past. So they've gone all out. It's just about making enough of them, and especially in COVID times, that might be challenging. But they seem to think they'll get it done, and I don't really have a reason to doubt them.
So, Mark, talk to us about those price points. How much is this going to set me back?
So you're looking at $699 for the iPhone 12 mini at the entry-level model, and then the high-end model, $1099 for the iPhone 12 Pro Max, and that's at the initial screen size, or excuse me, storage capacity configurations. But what you're seeing is the iPhone 12 price itself is $800 or $820, depending on what you're looking at. if you take a look at it, that's actually a price increase year over year by about $100 or $130 if you're matching screen size.
And of course, headphones not included or a charging adapter, right?
No headphones or charging adapter.
Gosh, I mean, anything else in terms of new products that we got from them?
HomePod Mini seems very impressive.
Yeah.
$99 smart speaker. I think that's going to be a holiday hit as well.
Yeah, but Mark, they haven't really competed well in that home market, have they? Against,
No,
yeah.
Their home products are not very good. The difference is it's no longer $300. It's now $100, right? So I think that their HomeKit stuff is good enough, for $100. My issue was just that their initial price of $350, now $300. It didn't really make sense to buy it, but at $100, you're sort of paying for what you're getting, if that makes sense.
Hey, Mark, you know what I'm wondering? I thought for a long time, and I think we've had conversations with you, that, this whole idea of kind of Apple to dominate your home, I mean, they certainly do from in our home, from phones and laptops and iPads and all that good stuff. But I do wonder about, Sonos is in the home market with speakers and so on and so forth. And I just wonder, are they still thinking about this and being, more involved in your home, or have they kind of pulled back from that?
No, I think they're going stronger than ever in the smart home space. I think they realize that they're missing some stuff there and they need to really bulk up. They're working on this new framework with some of the rivals in the space, Amazon and Google, to work with better interoperability between devices. So I think they know what needs to be fixed and they're working through it, certainly.
Yeah.
And one of the weaknesses, Mark, in their lineup was, kind of a high-quality, lower mid-price phone, and I think they were thinking about that. Did they launch something that might be in that mid-price range that would help in markets like India and other developing markets?
They did not. I mean, today's cheapest phone is $700, but they've lowered the price on last year's iPhone 11 and then the iPhone 10R from 2 years ago. And then there's the iPhone SE for around $350, $399 that was announced earlier this year. So lots of price points, but you're not getting anything in that $150 to $250 range. That is the sweet spot for some developing markets, for sure.
Is there anything here that you're going to buy?
I think the camera improvements on the 12 Pro Max are certainly very impressive, and definitely want to hear how the new HomePod sounds for sure.
All right. Interesting stuff, as always. Well, Mark, thank you so much. I know this is a busy day for you, especially when they've got a product announcement. So really appreciate it. Mark Gurman, technology reporter at Bloomberg News, on the phone from Los Angeles. I love when Apple does these upgrades. And it's, I feel like, Paul, I can see it, whether it's the first quarter numbers when we finally get there, that we're going to see all of the purchases that everybody did. And I just know from my household and other households of people who've been, when you've got an Apple house, you're just kind of, you're in that network and you just don't really, move out of it because it just takes too much because there's too much already connected.
Yeah, absolutely.
And they're also incredible products.
They are. They're great products. And, and then they're building on that, billion plus user base, whole services business, Carol, which we know has been such a big part of their growth story. It's really an amazing, obviously, business that they built. My interest will be, launching a major product in the midst of a pandemic.
Mm-hmm.
Boy, that takes some courage. But, if anybody can get it done, it's going to be the folks at Apple here. But again, it'll be interesting to see this huge product launch again when much of the world is in various states of being shut down.
Right. Mark seemed pretty confident about the supply chain. So, you would think that at Apple at this point has made sure that they've got everything in place. So kind of fascinating to see. By the way, Apple shares just down about 2.7%. We talked about that a little bit earlier. And the stock is up 65% so far in 2020. So investors definitely finding a lot of interest when it comes to, as we know, those FANG stocks, Apple included. All right, coming up, we're going to dig a little bit deeper into the workforce and especially those gig workers. We've got the co-founder and CEO of Stoke Talent. They're coming our way. Talk a little bit about that. And then we're also going to get into beverages, which is something people have definitely been participating in a lot when it comes to working from home, drinking from home, too. This is Bloomberg.